Hey guys, happy Friday Eve. Zaid here with you, the Mortgage Professor. Got some pretty big news to wrap up the week. Like we said in our last video, we were going to come back here and give you a market update once we got the ADP employment numbers out. And man, it was a pretty big market mover for us. Got some pretty big news coming out tomorrow as well to kind of piggyback off these unemployment numbers. But let's go ahead and dive right into it. So go ahead and get my stuff pulled up here. So this is the mortgage-backed security market. This bond is going to be what mortgage rates are based off of here. So over a 5-day period, you can see we are trending very, very positively. So just for some insight, we want this to move opposite the 10-year Treasury note. So with this report here, this mortgage-backed security, if this is trending up, just remember, rates are trending down. So over a 5-day period, which is what we're looking at here, we can see that we are trending upward, which is awesome for interest rates. Right here, where this starts to take off, this is where we're going to see the unemployment figures or the new employment figures from ADP come in. So this is huge news. As you can see here, we added only 37,000 new jobs in the month of May, which is dismal. So this came in 1/3 what the projection was. We were expecting to add about 130 to 145,000 new jobs in the month of May. We only added 37,000. So that's going to be a big reason as to why we're seeing this right now. I mean, we're seeing really positive moves in the market. Yeah, today a little bit flat and maybe a little bit worse than it was yesterday. We're giving some back, but that said, over a 5-day period, we are still leaps and bounds better than we were last week. So expect a new rate sheet to come out from us. I've only had 2 lenders reprice for worse today from what it looks like. Everyone else is still pricing better than they were, which is awesome. So this is great news. As you can see here, let me go ahead and pull this up for you. I really, right now, rates are flat. This is, again, my Mortgage News Daily website. Great place to go if you just want to see what rates are doing. As of today, you can see 6.525. Things are completely flat. I don't think we're really going to see any negative market movement today. If anything, I expect to see this continue on an upward trend. We got a pretty big report coming tomorrow. I really don't like using the ADP payroll numbers personally. This is going to be what we really want to keep an eye out for. This is going to be the unemployment rate from the U.S. Bureau of Labor. This is huge. We're currently projecting it to come back at 4.2. If it comes back at 4.2, I think we're going to be A-okay. We really don't want to see any crazy movement. We really want to keep that in that 4% range for sure. But I really don't think right now is a good time to lock rates. Personally, unless we just are super conservative and just feel comfortable doing it. I'm advising all my folks float right now. I mean, we are seeing, yeah, we gave some back today, but I think we're going to continue to trend upward here, and we're going to continue to gain on the mortgage-backed security market. So just my advice, again, part of the whole mortgage broker thing, and the reason why we're so much better than any retail lender out there is we can lock you if you want, and if the market gets better and the lender we have you locked with doesn't want to play ball, I'll just take you a different lender and take advantage of those lower rates. But right now, if I only had to lock with one lender, I'm floating. I really don't see anything on here that's scaring me and would make me think otherwise. I mean, yeah, we're giving some of the gains back, but we are still significantly better than we were last week. And you see that on rates. I mean, if you look at last week, we're at like 1/8% better. I mean, rates last week were about 7%. I mean, 6.9, 6.98%. And now we're at 6.875. Again, not my rates, just a 30-year fixed average on the for the whole country. So I think we're trending positively here, guys. Really, no reason to rush into locking right now. You typically don't really want to lock until you get within 30 days of your loan closing anyway, with the exception of crazy market movers that could hurt us. We typically are able to see what's on the horizon before it gets here. So, yep, that's all I got for y'all today. Thank you so much for watching. Please be sure to like and subscribe, and check back with us here to wrap up the week tomorrow. Thank you so much.